Welcome back, everybody. Thanks for joining us again. As usual, Quentin D'Souza is here.
Hey Rob,
Hey, how are you doing?
good gig. Coming back from we went a Caribbean cruise for a week last week, so back
What's that
this
like?
was fun. We went to like Jamaica, Bahamas, Cayman Islands, Cozumel, and a
Nice.
couple of sea days that we took our youngest son with us, so it was fun. Yeah, it was great, great. Lots of good weather, lots of, we did some racing in razors through some trails, some zip lines,
Cool.
tubing, yeah, all that kind of stuff.
Very cool.
So fun.
Um, I find my wife would never even go on one of those boats.
Really? The big boats?
No,
They're
no.
huge. They don't even feel like you're moving.
I guess it depends where you go.
Right. Did it have lots of people? Was it a big one, Quentin? A big boat?
Yeah, it was like it was called the Independence of the Seas. It's smaller of the Royal Caribbean boats, but it was
Mm,
like a quite a big boat for sure. And yeah, it was a lot of fun. Lots of activities, water park and stuff like that. So
cool.
it was good. Lots of things to do. I like the shows and then I like going on excursions and getting out and doing stuff. So yeah, I thought it was worthwhile. I think cruises are an easy thing to do to travel as you get older, particularly like I'm thinking like if I'm ever in my 70s or 80s and I'm having some mobility issues, which I hope that never happens, that's what I'm gonna do.
Mm.
Right. It's just simple, straightforward. You got the sun comes to you.
Yeah,
Yeah, I like it.
yeah. How
And
about you,
then
Rob? How's everything going with you?
everything's going great.
Yeah.
We've got the gym up and running, so my focus has mostly just been on that for the last little while, and it's been fun. And we've had lots of people come in, and we're getting good reviews and stuff so far. Uh, so far so good.
Amazing.
Yeah. So if you're in Surfside, Costa Rica, come into Surfside Gym.
That's awesome.
Do you have classes?
Pardon me?
Do you have lots of classes too, or is it just one of
No,
those
we
sort
have
of?
no classes.
Okay.
No classes
What?
as of
Oh,
yet. We're talking to a couple of people and trying to implement them, but honestly I found at the other gym that I was at, because these aren't huge spaces,
Mm,
right? So if you have a class in there, the people that are paying for their memberships kind of get pushed off to the side.
mm.
And that was happening at my old gym, and I don't want that to happen again because you know
what about personal trainers?
we have a personal trainer, one personal trainer right now, Darvin, great guy. Looking at getting another one on though.
Okay, cool. That's
Yeah,
good.
yeah.
That
Uh,
and we have Gillian Irving here because she's been popping in, but we want to make sure to introduce her too.
Jillian, I think, has been on the show more than anybody else, actually.
Really?
Yeah,
That's
I
not
think so.
true.
No, it absolutely is.
Uh,
I think you've been on like 5 times or something. This might be
No.
your sixth time on.
Oh, really? Huh,
Yeah,
interesting.
but that's cool. We like having you.
I've
That's why.
endured all this time. I'm still around.
That's
yeah,
why
well,
we.
that's a good thing for sure because
Yeah.
you're not in a newspaper somewhere and like
Yep.
for a bad thing, and
Well,
you're still in the business, which
That's
yeah.
is
true.
good, right?
Lots of people in the newspaper for bad things.
Mm,
Yeah.
Unfortunately.
unfortunately, yeah.
So Gillian Irving describes herself as an accidental investor, a label that traces back to 2009 purchase of a downtown Toronto duplex, made with little planning. After realizing that her early success was driven more by luck than strategy, she committed to more disciplined, data-driven approach, motivated by the need to build long-term security for her family. With a background in market research, she built a sizable real estate portfolio across 5 Ontario markets and New Brunswick. Today, as a mortgage agent with LendCity, she combines investor and lending experience to help Canadian clients structure investor-focused financing, including supporting those exploring cross-border opportunities in the United States and Mexico. and I'm actually kind of interested in the Mexico thing, not like
Yeah, well,
just
it's a little
because
bit
I
more
was there for,
complicated.
yeah, I've because when I was in Playa del Carmen for the month of January, I was like,
Yeah,
I cannot help. Like it's like an addiction. I cannot help but go look at stuff. And
right.
and so I was there looking at and I was like, none of these things pencil really well. You have to like your financing kind
Yeah,
of sucks. Like and every time I talk to somebody about financing, they're like, yeah, just buy it cash. Don't like
pretty
just
much. I mean, it's hard. We can do it, but well, it's the least sexy of all of the things we're talking about today. So let's finish it with it.
oh, ouch. Oh, oh
Yeah.
gosh.
I mean, we can
Yeah.
do it, but it's less glamorous than the other ones, I would say.
Well, what's
Yeah, I think at this particular point in time too, people are maybe reconsidering that option a little bit more as well.
Mhm.
So, whatever, we can touch on it, but that's all good. Jillian, you want to tell us a bit about yourself? You were just telling us that you're going to try to hit you're a marathon runner.
I'm a marathon runner. Yeah.
Yeah, so
I have a text message from Jillian like way back when saying I don't know if I can even do a 10K.
Right.
Just so you know, I'll go back and I'll find it. We'll put it in the show notes. No, I'm just
Well,
kidding.
I started running during COVID. I mean, it's not a huge psychological leap. Like I had to run away from my house. There were so many of us living there. All my kids were losing their minds. It was tough, right? So I just used that as an opportunity to do something productive. And I started running and I just stayed super consistent. And um, I, yeah, I just started and I never stopped. And consistency was my friend, as it is for anything. And look, I can make it super corny and bring back all of these strong parallels between real estate investing and marathon running because there are a lot of
Yeah.
them. Um, and yeah, within a year, I was running races. I ran my first marathon, a couple of years later. I kept running. I qualified for the Boston Marathon. It was crazy.
Wow.
Um, yeah, and so now I'm trying to like pick off all the world majors in the next couple of years. So that's what I'm working towards. So at the moment, I'm just training for Berlin. It's in the fall. So I'm just coming off a sprained ankle. So I've got lots of time to get my base back up there and hopefully kick some butt in Berlin this fall.
that's cool.
That's
And
Yeah.
so
so
awesome.
can anyone just go do it? Or you said something about the Boston one you had to qualify.
So for Boston, you have to qualify. So they've got really strict time constraints. So you have to get a certain time in a qualifying marathon in order to be accepted into Boston. And, I guess that's one of the benefits of starting running later in life. As you get older, the speed in which you need to run a marathon is more generous for us older folks. So I guess I used, a lot of running, a lot of marathons, and a little bit of my advanced age to help me with that one. But yeah, so I got into Boston with my time and New York with my time. But for Berlin, it's like most of them are lotteries, but they're hard because running is such a popular sport now. So I often so for Berlin and London, I'll do that through a travel company. And so you pay a little bit more, but at least you're guaranteed a spot. So
Oh, that's good.
yeah,
Yeah, you
yeah.
wouldn't want to go and not get a spot.
Yeah, no, exactly. You definitely need to make sure you've got your spot first and then train to make sure you can run it successfully.
Yeah, just so everybody knows who's not on the YouTube channel, Jillian looks like she's 30, by the way. So like she says that she's old, but you could never tell that by looking
Yeah,
at her. So like give you a break there.
thank
Whatever.
you.
So like on the real estate side, why do you think so many Canadians are looking south and looking at other places to invest in real estate?
Hmm. Well,
Mexico, that sort of thing.
yeah, for anywhere really. Well, I mean, so anyone who's been paying any attention to Canadian real estate in the last little while has like if you started investing 10 years ago, we're the beneficiaries of this like really incredible increase in prices, right? And so that's great if you started investing 10 years ago or 8 years ago or 6 years ago. Um, but prices are now incredibly expensive in Ontario, and they are in BC as well. So many people who are like, I understand real estate, I understand how the magic of leverage works and how it can advance your returns. They're like, but I just can't afford a $700,000 house in Canada, like anywhere. I just don't have enough for the down payment for a house that's that expensive. So I think price is one reason why people are looking south. They're like, I need a property that starts with a number one, like $100,000 home or a $200,000 home. And those are abundant in the States, right? So one, just a lower cost entry. And then again, depending on what province you're investing in Canada, there's many of us landlords who have felt the effects of jurisdictional biases towards tenants, right? So in Ontario, you get a tenant, they don't pay, and it takes you whatever, however long to get a tenant out. So people are like, I've had enough of that. I can't run a business or run a business safely where I can't control the number one input, which is my revenue. So they're like, I want to go somewhere where that is more controllable. So, I mean, obviously there's some provinces in Canada that are a little bit better, but in the States, there's more opportunities there as well there where you can go to different states that, if your tenants don't pay, you can evict them within 14 days, right? So they're like, if you're a business owner, if you're going to choose between where you want to start, one where it's super expensive and hard to guarantee your income, you're like, maybe Ontario is not the place. So often, investors are looking to another market where they can control those things. And the States
Yeah,
is it for a lot of people. Yeah.
I see the like particularly the last risk that you talked about for somebody who's just buying like one property or two properties and it's a duplex or it's
Yeah.
a couple single family homes because the nobody really cares in the government and the tenant groups don't care. But if you don't have income coming in to pay your mortgage every month, you're gonna go broke
Right.
because of the bureaucracy of the system. And
Hmm.
it's not based on like I know from my experience in Florida, I can get somebody out in less than a month.
Yeah.
And
Yeah.
and it's a much bigger population base than, than we have in Ontario.
Hmm.
And it's not that hard to do. And it's all based on the that system. So it discourages individual landlords and it prefers corporate landlords who
Yeah.
can sustain a longer loss and honestly for people like me who've been in the
Mhm.
system a long time and have like
Lots of equity.
580 units and lots of equity, I can I'm fine. But
Well, this is it. So you can weather the storm of one or two or 10 or 20 people not paying. Like that's not going to bring down your portfolio. But if it's these small landlords, right? And that's
yeah,
again why I always liked being a student renter, like a student
yeah,
landlord to because you could divide the risk up at least between five students or six students. But yeah, so it's like rental security, which is lacking these days here. So people are like, well, what are the options for me? And they're harder here, and they're
yeah.
getting harder, I would say. So,
Certainly, from like they're always financing is more challenging
mm,
for those investors. The people I was just saying this last night at Durham REI, there are the people who bought the most homes are the experienced landlords who could buy, 5, 10, 15 properties who bought it for cash flow, managed it very well. They can't get financing as easily as they could before. And those are the people that were buying. And
yeah,
because of the financialization of, I think that this is kind of coming to roost from 5 years, 10 years ago, previous governments and all the language is now coming to roost. And also the result of that is happening in the real estate market.
mm,
From my opinion, that's partly, like if you can't finance properties, you can't buy them, you have less competition. Prices have come down, the cash flow is there, but they can't get financed. You'll find like what I'm seeing now is a lot of the people who are buying are first-time home buyers, which is what we
Hmm.
probably wanted in the first place,
Yeah.
right? And so that's interesting that you say. So is the shift, we're looking at pricing, cash flow, financing friction in Canada, and there isn't the same thing in the US. Is that what it is?
It's not that they're, I mean, obviously, depending on lots of things, there can be those there, but I would say that there's less of it, right? So financing friction is a huge thing here. Like you were saying, it's harder for people to qualify. The qualification rules are totally different and way easier, which surprises people for investors looking to buy in the States. Um, yeah, and again, pricing. Look, I mean, you can buy houses in any range down there, but you can find places that cost $100,000 in Cleveland. I mean, and probably cheaper and still rent them out for, $1,500 a month. The cash flow is like there's options there for much cheaper properties, which Ontario investors just don't have access,
And there's
really
so
don't have
many
access to.
markets,
Hmm?
and there's so many markets and so many more cities and so many more opportunities. And so if there's the big ones that people generally like. I mean, everyone loves Arizona
Hmm.
but once you get into Phoenix, then you're up, like the prices are up, and you get
Yeah, of
into like
course.
the um like places in New York and places in California where the prices, you know, don't make sense necessarily, but there's so many other markets to
Yeah.
choose from, right?
Hmm.
Unlike sort of Ontario, it's a lot harder to find, I think, good deals and markets that work still.
Hmm. Yeah.
I think that there's a lot of cash flow in Ontario, and there's investors who want to buy. They just can't
Yeah.
qualify.
Yeah.
Like, I like if I have a property that I'm selling, I've seen duplexes in Oshawa selling for 650, legal duplexes. That cash flows probably about four or $500 a month, even after property management and everything.
Hmm.
The investors can't qualify. They
Yeah.
can't get a mortgage. All the professional investors I know can't qualify for them. So what's the point? Like it's it is for first time home buyers. How they've geared the market with the off-C and all this stuff. I mean, I'm not saying it's right or wrong. It's what the government wanted, and
Hmm.
I think that's what's being reflected now.
Hmm.
But in the US, like as a Canadian going down there, I have had lots of challenges with financing in the past, right?
Hmm.
I was ghosted. I spent like 6 months trying to find financing, and I got ghosted when we were just about to close,
Oh dear.
like by my lender, which was crazy. I ended up, going all over the place. So, um, what's the so I feel like you have something that's kind of different than what I've experienced in as a Canadian going down.
Mm.
Uh, so maybe you can explain some of the loan types that you're able to
Mm.
get for long-term rentals
Right.
and what
So I
that
would
looks
say,
like.
so it's such a completely different way of looking at financing compared to Canada. So in Canada, as investors, what we're all thinking about in the back of our minds always is, what are my ratios? Like, what is my job income or whatever my income? How does that relate to my expenses? They're going to turn under every single rock of all the income sources I have. And if my ratios are offside, I'm not going to qualify. So they're always looking at you, the borrower, and assessing you. And it's hard as a single person sometimes, like especially if you have multiple properties, just to get your ratios to sync up. In the States and the kind of loans that we're doing, they're more like commercial loans where they're not evaluating you or your income. They're actually just looking at the strength of the property. So when someone buys a property for me, they all I need to do to run a deal is, what's the price, what are the property taxes, what is the insurance, and what is the income and HOA fees if it's a condo. But really, those are the only really things we look at in terms of the property and whether or not that number is above one. And if that number is above one, meaning technically it's, I mean, we all know that there's things that can happen so you don't cash flow, but really that's what they're looking for. They're looking for a strong property. And that's what lenders are underwriting, is the strength of the property, not you as a borrower. So you don't need to show them any income documents. They don't care about your income. Like you can't show them US income anyway, because you don't live there, and you don't have any credit because you're a Canadian. So no income, no credit, and they just look at the property. So as long as the projected market rents are above your expenses, then your deal is good to go.
So is
And
it a DCR? Like what
yeah,
is the
it's like
what's
a
the
How do
DSCR loan.
they qualify your projected market rents?
They just do a market rent analysis, just like you would do here if you got a property appraised and they did a market rent analysis. If you have leases in place, they'll take those. But if you're buying a new place and you want to long-term rent it, they'll just do a market rent analysis. So it's super easy. And then they don't care. Like here, for example, like as someone who looks at a lot of mortgage loans, like we're always super careful, when we have someone who wants to buy lots of properties, that we put them down the right avenue with the right lender first. We're like, okay, we know we're going to go to this A lender because they do 5 properties. And after that, we know we've got another lender who doesn't care about the number of property. Like it's all about structure there. They don't care if you have 10, 15, 20, it doesn't matter, right? Each property is evaluated separately and independently, and they're like, you have 10, that's great. Like that wouldn't be a hindrance to your next one at all, because they're not really looking at you, they're looking at it.
Okay, and then lay out how some of the terms look for the mortgages.
Okay, so as you know, interest rates here and everywhere are established based on risk. I mean, obviously, we've got like bond yields and all of that start, but like, so for example, as you graduate up the risk curve, rates go up. So if you're in an A lender, the rates are lower. B lenders, where your ratios are a bit off, rates go higher. Privates are higher. So in the States, when we're doing these DSCR loans, because they have no security in you as a person, they're just looking to property, like that's riskier, right, for them as a lender. So in general, rates are higher for these DSCR loans. They would be if you were an American just getting a long-term rate. So you just have to expect your starting point for your rates to be a little bit higher. And then, you can get a 30-year term like you can here. And then you have they call them prepay periods. It's like you can have a 5-year prepay where it's like here, if you have a fixed rate for 5 years, you pay a penalty if you break it early. And there's kind of different ways to kind of adjust for that. But yeah, the year and terms can vary between 1 and 5, and then your amortization can be 25 or 30.
So
And
they
you can
don't
do
do
interest
30?
only too. Like there's options for
Okay.
that.
But you
Did you
said
say
30
loan to
year.
value? Sorry, did I miss that?
No. So for Canadians, so for foreign nationals investing there, they're going to want a little bit more down. So we usually say to budget between 25 and 30% down. So again, it might be a higher down payment, but if you're buying a much cheaper property, it's still like less capital intensive
Yeah,
compared to it is
yeah.
here. Yeah.
And did you say that there was a 30-year term, or is it 30-year AM?
A 30-year AM.
Or 30-year AM?
Mm-hmm.
But you
It's
you
30-year
you
term,
can
60-year AM, Quentin.
no. Like my mortgage in the US is a 30-year term. Like
And
Oh,
what's the amortization?
it's 30 years. It started at 30 years.
oh, hmm.
So, but the problem is that, like, so I have my 4 properties that are renewing next year.
Hmm.
After 5 years, it flips to like what you would call like a variable rate where it's prime plus 1 or
Hmm.
prime plus 2. I can't remember.
Hmm.
And so and at that point I can refinance, but I have a 30-year term. Like they're not going to get rid of me, which is kind of like a benefit of
Yeah,
Yeah.
yeah, I see what you're saying. It's not a
except
5-year term and then a renewal. You could refinance after 5 years, but the term
Right.
is 30 years.
yeah,
Yeah,
which
yeah.
is
No,
like
I've heard that. Like that's a very interesting point too, right?
yeah.
Quite a
So I
bit
mean,
different.
so if I look at what is the US prime right now, Jillian? Do you know?
Oh, that's a good question. I'm not
Okay.
sure. We usually do fixed rate loans
And
there.
what do the numbers start with?
Um, I would say for most of the deals we're seeing, it's either high 6 or low 7.
Oh, wow, that's pretty good.
Yeah.
Okay. And so, like, what can you give us like an example of like some of the strategies that you've been able to finance in the US? So a
Mm,
long-term rental is pretty simple,
yeah.
straightforward. But
Uh-huh.
people who buy stuff in the US, they're usually a little bit more creative. So they want to
Yeah.
do like a Airbnb or Burr, or they're flipping or whatever.
Right. So that's like it's no problem. We have Airbnb lenders who will use that as well too. Like it's much easier that way. Again, we have a lot of investors who are coming to us who want to do flips. That is actually, a pretty interesting strategy because we have lenders who will lend at 65% loan to cost. So imagine, like, let's just make up some numbers. You purchased, like, there's a property for sale for $90,000. You're going to put in $50,000 and it appraises at $200,000. Well, 65% of that is $130,000. So you've got that. They'll take the $50,000 reno loan and they'll give that to you in draws. So you don't need to have that at all. They'll pay for your renovations. And then so you're left with $80,000, and on a $90,000 purchase, that means you need to bring $10,000 to the table, which is pretty good, like from a capital allocation perspective. Now, for all of those people out there who are going like, wow, I bet I can like raise the ARV even higher and I wouldn't have to bring any money to the table. I can make it work. They won't do that anymore. No one will do a zero money down loan. It doesn't matter how great your numbers are because they've been there, done that. Like that's not their first, it's not their first rodeo with zero money deals in the States. So everyone's been schooled on never doing that. So you'll have to put in something, even if your numbers look like you wouldn't need anything, you have to bring some money to the table. But the point is that you can do flips in the States with not a ton of capital.
Right.
And
Very,
that's,
very little capital to be.
yeah, with very little capital. And so, compared to what you're going to ARV for, right? Like what you're going to sell it for when you're done. So for a lot of investors, that's super appealing. But I will say this, like the refinance component. So in Canada, we're all used to this 80% refinance, sometimes 75%. There it's lower. It's 65%. So you really have to know your numbers. You have to understand like the full um you have to understand the full process before you do it because everyone's
So
like,
for a
oh,
Burr, for a
for a
Burr,
burr, yeah.
right? Okay. And is
Yeah,
there
but I mean, if you can get your act together and do, sort of one flip after the other, you don't need a ton of capital. And that's what's super different from here in Canada. Like we've got lots of flip lenders who will, but you need to show them evidence that you have that money to do the renovations yourself. They're not going to give it to you. Whereas we have lenders who will give it to you in draws. I mean, you might have to pay it up front and they pay you back, but at least you're not holding up your capital at all.
And with the Burr component, there's something different in the US and Canada is that they have a seasoning.
Mm.
Um, can you explain that? Because not everybody will understand it.
Well, seasoning is just simply it's kind of like they just want to make sure that you can't sort of recycle super quickly. So if you finish something, you have to wait a little bit.
And what is there a specific time like, or does it depend on the lender?
It depends on the lender. I'd say there's usually a minimum of 60 days. Some might be a little bit longer, some might be shorter. And again, this is the tricky part about the lenders in the States and trying to, wrap your head around what is possible. Because here in Canada, like as investors, we get pretty used to a handful of people we would turn to. Once we've exhausted the A lenders that we all know, we move on to a handful of B lenders, and you know who those are. But in the States, literally there's a lender at every corner. And so everyone does things slightly differently. And so if you switch lenders, they might have a little bit of a different product from the other DSCR lender as well. So nothing is written in stone until you have your lender picked. And then the details might kind of shift around a little bit. Like, so for
The seasoning,
example,
the purpose for that though is just to get the couple of payments to ensure a couple of payments.
yeah,
That's really all it is.
yeah.
Yeah. Okay.
Mhm.
Um,
Do
So
you?
I would say what we see, so people were like, um, in selecting a lender there, I mean, we have to weigh all these different criteria in selecting a lender for our investors. So some, for example, don't want to have to travel to the US to close the loan. So some lenders have something called RON closing, remote online closing. Some do not, where, I mean, you literally have to you must hop over the border to sign your final documents. They'll send you a notary, like they'll send you a mobile notary. You just meet them at a Starbucks or whatever, but not, some lenders will do that. Some will not do that. So if you can't travel to the US, like that needs to be established up front. If, if you want a super, super, super fast closing, like a 14-day closing, that's like a different avenue as well. If you want to close in a LP versus an LLC, that can also be different. Some lenders don't like that. Other people are fine with that. So like the structure that you use, the layering of your structure, all of that, these are all things that we need to bring to the table. And that makes it sound complicated, but it's not terribly. It just means the lender we pick for you, like we need to do that homework, but it's easy. It's easy to find someone, and there's so many.
Yeah,
so you mentioned different corporations and also like, yeah, let's just talk about that. Is that like, what are the requirements? Can you close in a personal name? Do you need to have a corporation?
You can close in your personal name. We don't recommend it. And there's way more lenders who will lend in a corporate structure. So I would say and this is probably the biggest point of friction for Canadian investors who want to go down to the States, and that is that you kind of do need a legal entity set up in advance. Um, and we have tons of people who recommend, like, cross-border tax people who can assist you in setting up a structure that makes sense for you. And so really it's best to have that in place before you go shopping, right? Because we can get you preferential rates if you're closing in a corp, and plus it gives you, protections from liability and double taxation and all of that. So we do recommend that everyone has a corporate structure set up. And that's money out of your pocket. So some people aren't prepared to get that set up before they go shopping. They want to do it the other way, where they want to shop first and then they're not ready. Um, then they're not
What are
ready.
the
Like,
rough
buying time
costs though?
happens.
Like they're not mind blowing. It's probably like $1,500 or something like that,
Yeah, it's not,
right?
no, it's
Like,
not expensive.
yeah.
it depends
What
on who you're asking for advice.
Yeah, I suppose that's true, right? There's always more
do you get the
expensive,
wrong
but
advice, Quentin, one
I
time?
spent probably about $25,000 talking to different lawyers and accountants trying to get the right structure.
right,
The actual cost of the structure didn't cost me that
right.
much. But I also
But
want
you're
to make
talking
sure.
about, you're going in there with your big plan and having everything set up, umbrella
Yeah.
corporations
No,
and
no, no. It was I was going guns a blazing, like,
Right.
multifamily, LP like, so I ended up with an LP structure.
Hmm.
And I am the some of the challenges was the type of lenders that I could work with don't all
Yep.
like having an LP structure. So like, but at the time it just made the most sense to be able to do for liability protection, but also like structure so that I didn't get double taxed, which was really
and
important to me, right?
yeah. But all you
And
had to do is talk to Jillian.
no, it's not that easy. You have to also know my background and like all my net worth and like a whole bunch of
Hmm.
stuff that I like. Although I appreciate her as a friend, I'm not going to send
Although you
her all
could
my
you could
my stuff
you
unless
could
we're
tell us
working
that stuff
together.
here right now, and we could,
Oh yeah. How about you
yeah.
tell me what's in your bank account, my friend?
Ah,
What
let's
are
see. What are we going to talk about
Look at
next?
him change the question. All right. So, what's the closing process like for, especially compared to like the Canadian closing process?
Yeah, like it's pretty simple. I mean, it's pretty comparable. I mean, there they have title companies instead of lawyers. They take care of all the behind the scenes stuff. You pay them directly, and we can close pretty quickly. No, but no one, having said that, no one really likes a super fast closing because everyone's really tense, like, and if you get an appraiser that takes longer, but yeah, like we can close in 30 days if you need, like, less than 30 days if you have to. And it's more just about getting a title company and that's it. Like it's not super hard.
So what would be the reason uh to have such quick closing? Like why are people wanting that?
Mm, I, I don't know. I mean, I guess if you're a flipper, I mean, time is the essence, right? If you're a flipper, you just have your project, you want to like the velocity of money matters to you. If you're trying to do deals, a lot of deals, you just want to get in, get out. Um,
I was
but
kind of wondering what maybe it was more of a like, hey, give us a good deal and we'll close quick
But look, I
kind of
suppose it could be
thing.
a negotiation tool too, right? If you can tell your seller that you can close in three weeks, that you might be able to negotiate a slight discount and it makes them happy to just close quickly. But I would say just from a mental health perspective for
Yeah,
everyone's
yeah.
sake,
So
like
like
just
45 days is
yeah, just
pretty good.
regular is good. I mean, we can do it in a pinch, but
Yeah,
yeah.
yeah.
If you're
I mean,
closing
45
cash,
days
if you're
is pretty
closing
quick
cash,
closing,
you
you
can
know.
close really quick, right?
Oh
Yeah,
yeah.
But if you're
that's
trying to
true.
get financing together, it just doesn't make a lot of sense. You're just going to
Yeah,
create a lot of chaos for everybody unless there's some super really good deal and it makes the seller really happy. I don't know if I would create that type of chaos, right? But it comes with experience when you're doing it. I just found that there's like every brokerage has their own title company, and I was a little weirded out when I was going down there. I'm like, I'm not even dealing with a lawyer. Like, who is this person? Like, I'm
yeah. Who is
sending them
this
all,
random title company?
like,
Yeah.
and they because everybody can own, like a lot of people own title companies who have brokerages. So you're not even having it reviewed by anybody external, although it says that it's external. You're
Mm,
really dealing with a title company and the realtor. And you're
mm,
like, did we actually buy something? Like, did it actually
Mm.
go through? Because because I guess I'm so used to dealing with lawyers with all the transactions we do. It was a kind of shocking experience in
mhm.
like,
So
you know,
what kind of onus is on the title company for their due diligence?
well,
Mm,
that's the thing too. Like I had an experience where when I had done my first, like I had gone from one lender to another and then gone through a title company to get into the next lender. And they had said that there was some other problem that the first title company didn't figure out or whatever. I was like, well, I don't know. Like I'm just not with this person. So I tried to connect the two title companies together to figure it out. It got figured out, but I was just like, what this is the weirdest. It's like Jane talk to John and figure it out and we'll get it done. But I guess you
mm,
do the same thing anywhere. Like the only difference is they have a law degree in there, but they're doing the same thing. And like if you had a problem with title before in your doing two transactions, you'd probably end up doing the same thing.
mhm.
What sort of closing fees are there? Like what can people expect to pay for closing fees?
Right. So there's well, the fees in general. So like in Canada, there's an appraisal fee that is inescapable. Everyone needs to do that. There's lender fees. So there's a fee that we collect, and depending on the size of the loan, that could be anywhere between 1% and 3%. So obviously, like these super small loans have slightly higher fees. The bigger ones have lower fees. Um, some of the like again the lenders have their own fees that we don't always know in advance exactly what they're going to be. Most have an underwriting fee of some sort that yeah, so they have an underwriting fee, and then there's the title fees. So like your lawyer fees here, depending on the title company that you use, it can range right from whatever $1,500 to $2,500. It depends.
So is there like a rough percentage based on the cost of the property that you could
Oh,
use to roughly kind of, no,
uh,
not really.
no, not that I know of.
Because it's independent companies,
Yeah,
they set their own standards. So like you could be in the same house and deal with two different title companies and two different lenders and have
yeah,
totally different experience.
yeah.
right? So it's quite I love the chaos of it because it's like capitalism extreme, but like at least you know you're getting stuff done, and you know it's
Yeah,
quite an interesting experience as a Canadian down there. And you know, I was buying back in 2018 and 19, like the properties I were buying was like 80,000 and like 130,000, 140,000 for a duplex, and now they're worth like 240
right.
and 400 and
Wow.
350 or like, so they've done well, and they cash flow well. So now I have to come back to Jillian and say, "Hey, I got a lot of
You need to
equity.
refinance these.
Next year's it's coming up." So
Yeah.
it'll be
So I mean,
interesting.
the States, it's like a, as you say, it's sort of like this big, beautiful, chaotic place where there's more of everything. And I would say that's the good part and the bad part I see for my investors. So I talk to people all the time who really want to invest, but they're incapable of moving forward. And they can't because they have analysis paralysis. They're not just deciding between Ottawa and Peterborough. It's like they're deciding between, a gazillion options, and they cannot put their stake in the ground because they cannot decide where to go. And so this is where I tell people who are interested, spend some time figuring out what your market is. Use the skills you have as a Canadian investor to narrow down your market. And then once you have one or two markets or whatever you narrow it down, don't look anywhere else. Stop. Because it's like that shiny penny syndrome, but on steroids, where your market has all the things that you look for, all the criteria that check your
Yeah.
boxes, but so
You're
does
like,
50
but
other
what about
markets.
this one over here? It might too. You know.
Yeah. And
Yeah,
it's
no, I
like,
see what you're saying. I think that that's very good advice because,
mhm.
you know,
And then
you've got to,
again, like so Quentin, I remember, I mean, in your meetings I hear you guys talking all the time too about, you stay focused on your strategy as well. So if you're going to start flipping in Cleveland, then just do that for a while, master that before you then go to long-term renting in Kansas City. Just focus, focus, master what you're doing, and then once you've got some momentum, then look elsewhere, because otherwise the difficulty in starting will overtake you, or to get really good at your craft is hard to do because there's just so much distraction out there. So just focus in first.
well, I think the
Yeah,
best advice that you gave right there was just if you find something that meets your criteria, then go ahead and pull the trigger.
Yeah.
Yeah.
that's cool. And you must see some pretty cool insights. Like, where are Canadians buying, like in the US right now? Like, where are they flocking to? Because it used to be Arizona and it used to be Florida. And
Mhm.
I don't know if that's changed or the same, or is there like something else that's really drawing a lot of like the majority of your clients, let's say.
Well, so I will say that I have a ton of people who are interested in the really, like the entry level, the really inexpensive property flips that you can do in like Cleveland or Detroit. Like people who want to do flips, that's where they're going. One, I think because it's near. I mean, first of all, it's not difficult to get to. It's not far away. And the entry price is low. So it's kind of a smart way to refine your craft with not so much risk in terms of money. Like, how far south can $110,000 purchase really go, right? I mean, you're right. You're capping your downsides when you're starting with cheaper properties, and your upside as well. But at least you can get better at flipping. So I've got a lot of that. I still do have a lot of Florida, though I feel that Florida, um, that while there is a lot of people who show interest in Florida, that the amount is lower than it has been in the past. There's all sorts of like there's insurance stuff that there didn't used to be in Florida, where it's harder to get insurance, and insurance prices change
Yeah.
by magnitudes of whatever a year. And so that's also made it difficult for investors to control um, their costs. But we've seen a lot of like Phoenix, Arizona. There's like Kansas City stuff. Um,
What's Kansas City like? Like is it long-term rentals in Kansas City or is it like,
well, 46% of the residents in Kansas City are renters. Like it's just a rental market.
Hmm.
So,
gotcha. So
um,
long-term rentals are what you're seeing in Kansas City.
yeah.
What about the
And it's got like, but
Carolinas?
it also has infrastructure stuff that's
Yeah,
super important. Like, I think that's where it's the home to the largest rail center in the US. It's got
gotcha.
$1 billion plus in data centers from Google Meta. Like, I mean, if you want to find markets, do that kind of research, right? Like,
Yeah.
Hmm.
you know, so Huntsville, Alabama, it's like a tech powerhouse. That's where NASA, Boeing, Meta, is. That's also a market where housing is 25% cheaper than the US average. Like those are the kind of metrics that you want to look for when you want to find a market. Like where's big industry going? What's the rental market? What's the percentage of renters in that market? And that will help you a lot.
Yeah. Yeah, we've got a upcoming guest, Neil Bawa, that's gonna talk to a lot of that sort of stuff. So that I think that'll be helpful
Hmm.
too, kind of connecting up. So make sure you keep listening to our
Yeah,
podcast here.
yeah.
So
um, I was just, I lost my train of thought there. Sorry. Oh, I was going to say, so if people want to learn more about this from you, though, what
Hmm.
can they do?
Well, I'm always free to have conversations about this. My email is Gillian at LendCity.ca. You can send me an email. We can book a time in my calendar to talk about it anytime.
Okay, we'll put that in the show notes.
what's a
And
good like piece of advice that you can give people?
Hmm. Yeah, um, can I use a marathon metaphor, or is that too corny?
No,
no, go
no,
ahead.
not at
Please
all.
do.
there's a couple. I would say discipline beats motivation every single day of the work, right? Your motivation fades during your training. So you need to follow a plan. Like you need a system to figure out what market you're going to invest in. You need to show up and do the work even when you don't feel like doing the work. Like that's the discipline part. You need to keep going when it gets hard or news comes out that is going to make your path forward difficult. So discipline, like what is your plan? What's your training plan? And then follow that training plan and don't let anyone come up like get you off that path because it's the consistency that makes you the runner that can run the whole marathon or the investor that can actually invest for the long term. And then um, preparation. So, and that comes back from the discipline that you do. So, you doing all that work, doing your research to figure out which markets have the upcoming industry, where are all the data AI centers going? Like, just use that as a metric to find your market. Like, we all know that's coming. So, and if you prepare, that's going to reduce the risk. So, like, while you want to be an action taker, you also need to be a prepared person so that you can actually cross that finish line or keep going in the
Keep
the
running the
miles at
race.
the end that are so hard, right? That's what's going to
Yeah,
help you do it.
the last couple of kilometers or the last couple of miles for sure. And I've got to ask you because we put it off, Mexico. How the hell do you get financing in Mexico?
Okay, so yeah, so there actually is a lender in Canada who will do lending in Mexico, but it will come back again to your Canadian income. So you need to have Canadian income in order for those deals to work. And they do look at the ratios as well. So the ratios are a little bit more extended. But yeah, it comes back to Canadian income. But we do have a lender who will look at it. So if
Will it
you've
be
got good
like,
Canadian income, we
okay.
can do them for you.
And what kind of loan to value? Because I've been hearing like 50% at the
Oh,
highest.
you know what? I think it's lowish. I want to, and I need to check because the last time I talked to them, they were decreasing it. I want to say 60, but I'm not for sure. I'm not.
Okay. All right. That's fair. I had to ask because there
You have
are
to.
a lot. When I was in Playa del Carmen,
Yeah.
it was like little Quebec. I was like, what the? Like it's crazy the number
Yeah.
of Canadians
Quebecers
that were
love
there.
Mexico.
Yeah, they love Playa del
Yeah.
Carmen for sure.
Yeah.
So it was quite interesting.
Yeah.
Well, very good. Thank you, Jillian. That was like super packed with information. I think probably more jammed in than any of the podcasts we've done lately. A lot of good stuff. I enjoyed
So
it. I
glad.
enjoyed talking about that.
Yeah, love talking to you guys. It's always good.
So, again, what's the best way for people to get in touch with you?
Best way is by email. So Gillian at LendCity.ca. Yeah, that's probably the best point of contact. Then we can get my calendar link out, and I'm happy to have any phone calls at any time.
Perfect. We'll put that in the show notes. And thank you so much again. Quentin, how
It was
can
a
people get in
pleasure.
touch with you?
Yeah, you can go visit quintindesouza.com, book a 15-minute call. Happy to chat whenever I'm in the country. And then yeah, I mean, come out to Durham REI. We had a great meeting last night. We have meetings every month, and I'm starting to have guest hosts do the opening and closing and that sort of thing to give me a little bit more flexibility to travel.
I
So I'm
like that.
having
You're still talking though a little bit?
I do a talk in the middle, but I'm trying to do more and more of other people
Mm.
just hosting the meetings now because I've been doing it since 2008, haven't missed a meeting, but
Wow.
now I'm gonna miss a couple, I think.
All right. Well, thank
Awesome.
you, Quentin. Go over to durhamrei.ca
Yeah,
and check that out. There's a lot of good stuff on there, a lot of good resources.
awesome. Thanks, Rob. This has been a great and I'm gonna see you in Costa Rica next month. If we
Yeah, that
well, I mean
sounds interesting, Quentin. Well, I can't honestly say I'd go with you, but it does sound like a lot of fun. But I don't even
I
think
would do that walk in a
I don't even
heartbeat.
think I
yeah.
would go if I could, which I can't.
Yeah.
But I mean, that's
280 kilometers
2 week
across.
commitment.
Yeah, across the whole of Costa Rica from the Atlantic to the
Okay, so
Pacific.
what is that a day? Sorry, I can't do my mental math.
It's like 20 to 30 kilometers a day.
Okay, that's so awesome.
Yeah, it's
Yeah,
fun.
I want like a full debrief. I think I want to do that.
Yeah, absolutely happy. I'll take lots of pictures
Yeah,
and,
good.
maybe I can
Good.
drag Rob like maybe the last leg or something so he can drive me back to Playa Portera.
Yeah, how do you get back?
I don't know. Well,
Quentin,
I'll
I
figure it
have
out.
two cars that are both broken. So
Ah,
we'll
all
see
right.
what's going on in a month, but the eight ball says it doesn't look good.
That's okay. I always figure it out. I'll hitchhike if I have to. We'll see ya.
There you go.
Yeah.
And we'll talk later because
Okay.
I've talked to a couple of people about it. But if you want to reach me, you want to talk about Costa Rica at all, Rob at MrBreakthrough.ca. Thanks, everybody. We'll see you next
Thanks,
time.
everyone. Thanks, guys. Really
Bye.
appreciate
Thank you.
that. It was a great
All
chat.
right. It was fun. Take care. Bye-bye.